This boring little real estate stock outperformed the S&P 500 and no one was paying attention. Millrose, a spin-off stock that started trading recently, jumped over 30% in just a few months, while the market was struggling with political uncertainty. That's a tremendous return, and you could benefit from similar opportunities in the future. On average, around 20 spin-offs are released each year. Their prices often follow a short-term pattern that appears right after they begin trading on the stock market. This pattern has enabled investors like Warren Buffett, Peter Lynch, and especially Joel Greenblatt to build fortunes by paying attention to them. These famous investors recommend investing in spin-off stocks, but how does it work? Well, it happens when a company decides to separate a part of its business and turn it into a brand new independent company, and its shareholders receive stocks of the new company. In Millrose's case, it was spun out from Lynch, one of the largest home builders in the US. Why? First, growth. Millrose was expanding rapidly and drifting away from Lynch's core business. That kind of separation tends to happen when a business is doing well. That's a common characteristic of many successful spin-offs, like Vernova or Solventum. Both companies were spin-off last year and got great performance. Just look at how much their prices increased. The second reason is valuation. After Millrose began trading, it no longer belonged to the home building industry. It became a real estate investment trust. This subtle change in its industry classification is one of the key reasons why spin-off stocks can be so profitable. Think about it, you get a new company in a new sector with a new price and PE ratio. While Lynch was valued as a home builder, trading around 9 times earnings, REITs typically trade around 25 times earnings. That valuation gap gave Millrose a lot of room to grow, and eventually it reached its potential. Growth and the new valuation are two internal factors that make spin-off stocks great investments. But there is also an external factor, a pattern in the stock's price behavior, which creates a great opportunity to buy them at a discount. Here's why. Large investment funds often hold stocks that match a certain style or sector. When they receive shares of a spin-off that doesn't fit their strategy or is too small, they sell it. This sudden selling creates a short-term dip, even if the company is solid. Let's take Millrose as an example. It started trading on February 7th, and within just a week, it lost 15% of its value, because its institutional shareholders were selling. From that moment on, investors had the best chance to buy Millrose at a discount. It took over a month for the market to realize, wait, this stock is actually cheap. From March to May, it rose by over 30%. You can take advantage of this pattern. Investing in spin-offs during the first weeks after they begin trading could be a powerful strategy. Let's look at other examples from last year. Solventum, 3M spin-off, had a rough first month before bouncing back. Vernova, General Electric spin-off, was flat for a month before skyrocketing. Vernova's situation, without a dip, often happens when a spin-off is also a high-quality company. Remember, even if spin-offs are special situations, you're still investing in businesses, with a CEO, a balance sheet, and intrinsic value. That's why it's important to evaluate spin-offs carefully before they begin trading. The success of spin-off stocks also depends on their parent company. Spin-offs enter the market with the balance sheet their parent company gives them. That means cash, assets, and debt. Things that can give a spin-off a major advantage over competitors. That's exactly what happened with Millrose. It started with $6 billion in assets and just $0.6 billion in liabilities. Compare that to its peers. EPR Properties had $5 billion in assets and $3 billion in liabilities. As you can see, Lynch gave Millrose a huge edge. Why? Because parent companies often keep shares of their spin-off. So if the spin-off succeeds, they benefit too, and so can you if you're paying attention to spin-offs. In conclusion, the success of spin-offs often comes down to 4 factors: the performance before being released, their valuation, the post-spin-off price pattern, and careful stock evaluation. These factors can make up a powerful investment strategy focused on spin-offs. You can find information about upcoming spin-offs on finance websites, through the SEC, Form 1012B, or right here on this YouTube channel, where you'll learn how to build a strategy to beat the stock market in the short term.